Coming up on Your Money and Your Life, the common tax deductions Aussies forget to claim. Is pet insurance worth the extra expense? Andrew Winter weighs in. Our new money mindset deep dive with everyday investors. Plus, in Kochie's budget challenge, is this Australia's savviest saver? G'day and welcome to another season of Your Money and Your Life, the show dedicated to helping Australians make the very most of their money. Whether it's cutting household bills, growing your wealth, or avoiding those expensive mistakes, we're here to help you get ahead financially. And we're kicking things off with one of our favourite segments, Kochie's Budget Challenge. Together with the team at Compare the Market, we put real household budgets and bills under the microscope. Our previous seasons have helped Aussies find thousands of dollars in potential savings right under their noses. Now today, I'm chatting with an absolute bill genius. Meet Brandon.
If there's any bills that I can try and reduce or get the same thing for a cheaper price, I'm going to do that, and I've got lots of different strategies that I use. I just pay the rent at the property that I'm at, but it's really Madeline's property. Madeline's my cat. Hi, my name is Brandon. I live in Sydney and I relentlessly try and track down the best deals possible for everything. I absolutely love sharing all of my money saving tips with everyone, and I'm really excited to share them with Kochie. I think Kochie shares my passion for saving money and reducing costs, so I'm super excited.
Brandon, you have rocked our world. I don't think we have met a savvier saver. You even bought this table, 2 chairs, on Facebook Marketplace just for this interview.
Yeah, and I bargained them down $5.
And where do they go after this interview?
Probably later today I'll chuck it back on Marketplace, maybe for a bit of profit.
You live like a monk. It's amazing.
Yeah, I just love it. I genuinely enjoy spending hours and hours just trying to save money on every different thing possible.
So share some of your strategies.
With like recurring bills, things like interest payments, private health insurance, my mortgage, every 6 months I'll contact whoever it is, like the bank, for example, and just say, you know, like, is there anything that you can do for me? You can literally save thousands of dollars by doing this stuff. For everything from my phone provider, electricity provider, everything, I'm either on the cheapest plan, or if I'm not on the cheapest plan, at least the cheapest plan I could find.
You are a guru at this and passionate.
I love it.
And you've even started your own business.
Yeah, so a little while back, me and a friend, we started Compare Pet Products. That helps people find the cheapest place to buy pet products that they already buy.
Let's have a walk around the place. You show me great strategies for cutting things back. Come on, let's have a look. Brandon, that is a very small couch for you.
Oh, it's not mine. It belongs to Madeline. It's her couch.
Where's your furniture?
Don't really need any.
So where do you sit?
Oh, I just have lunch on the kitchen and dinner on the kitchen bench, and...
Where's the TV?
I don't need it. I just use my laptop.
Kitchen. How do you cook?
Almost every meal I use the air fryer. I used to use the oven, but I found that, yeah, the air fryer is quicker and cheaper.
Compare the Market says $300 a year to run an oven, $80 for an air fryer. So that's a big saving, isn't it?
Oh, absolutely. I've definitely noticed the difference since I bought the air fryer.
So I've been told you bubble wrapped your windows for heating and cooling, is that right?
Yeah, so the previous place I lived in, one of the rooms, it got really hot. So I looked up different ways to try and help with that. And yeah, putting bubble wrap...
Did it work?
No, it just made me look crazy.
What's that? No. Now, what about winter?
Avoid using the aircon, so yeah, I use an electric blanket.
That's it, an electric blanket.
If I really need, I will use the aircon. I'm not that bad.
Well, see, a heater for 6 hours a day is around $259 a year. Electric blanket is $18 a year.
Yeah, the heater, it's very expensive, so I really try and avoid it where possible. Even I put jumpers on, I try and do everything else first.
granted, that was a lesson even for me, and I could see the passion.
I love it.
Where'd it come from?
I'm not sure. Just over the years, I've been just trying to save money because I'm like, well, why pay $80 a month for internet when you can pay 25% less? You know, like why pay more for the exact same thing? And these are big companies we deal with. You know, I'm not screwing over like a small retailer or anything. These are massive companies. All they care about, in my opinion, is profit and getting the most that they can out of the customer. So why can't the customer try to get the most out of them?
Mate, you are an inspiration. You've certainly set us a challenge to see if we can find even more savings for you. Next week, we'll reveal all. Hopefully, you'll be pleased. We'll see you then.
Good luck.
Oh, that's a challenge, isn't it? What about the tone? Good luck. Right, it's on. After the break, stop paying too much tax. The common deductions Aussies often overlook. Welcome back to Your Money and Your Life. Well, most people treat tax like a mid-year scramble, but those getting ahead are playing a completely different game. Recently, the ATO estimated Aussies claimed over $28 billion in work-related expenses. It's about $2,700 a person. But experts say plenty more still goes unclaimed. So what can you claim on your tax return that you may not know about? Financial advisor Ben Nash from Pivot Wealth is with us. Ben, good to see you again. When should you start thinking about tax?
Look, I think as soon as you start earning an income is the right time to be thinking about tax. At the end of the day, every dollar of tax that you save is an extra dollar that you can use to build your savings, your investments, pay down debt, or get ahead. And so obviously the higher you earn, the more tax you end up paying and the more potentially valuable deductions can be. But I think learning those skills and building your muscle around tax saving and tax strategy, there's no time like the present.
Okay, so, and it's ongoing, 7 days a week, all year, not just at the end of financial year. So what are some of the strategies and deductions people tend to forget about?
Well, the three biggest areas for deductions are motor vehicle expenses is a big one. You can claim deductions of a bit over $4,000 a year without even keeping a logbook, and even more if you do follow the logbook method. So that can be quite significant. Importantly, though, you're not allowed to claim things like driving to and from your office. It has to be travel for work-related purposes, but there's some really significant deductions on offer there. And then if you use a logbook method, you can also deduct some of your car costs and any borrowing costs for automobiles. Also work from home expenses. With more and more people working from home, you're able to deduct a portion of the expenses for operating your home and your home office as well. And then the other big one that we see is education and advice fees. There's a lot of things that a lot of data points that are showing that Aussies are spending more and more on self-education expenses. And a lot of those can relate to your work and help you to increase your income over time, which under the ATO's rules means that they are essentially deductible. So again, there can be some big savings there.
Topping up your super always gets mentioned. Is that a good way of reducing your tax?
It's a great way to reduce your tax because every individual taxpayer in Australia is able to contribute up to $30,000 under the current rules, and that is increasing to $32,500 from the 1st of July, and you get a full tax deduction for that money against your salaried income. Now, that does include any money that's put in by your employer through the superannuation guarantee, the compulsory contributions, but for most people, that leaves a significant amount of room to get money into your super fund. And the other benefit from a tax perspective is once the money's inside your super fund, it's then able to grow at a reduced tax rate because inside superannuation, the maximum tax rate is 15%, which is much, much lower than most people's marginal tax rate. So when you're investing inside your super fund, it builds up faster. Now, if you're a first home buyer and you're looking to get onto the property ladder, it may not be the first thing that you go really hard at because you can't access your super until you're getting closer to or in that retirement age. But there are some really significant tax deductions on offer.
And also, if you haven't contributed up to your maximum in previous years, it accumulates, doesn't it? You can catch up, which is
right.
a great tip.
Yeah, so you can, if your super balance is below $500,000, you can catch up on up to 5 years of your previous unused contributions, which again, for most people, you're talking about some significant deductions, and that can be particularly helpful if you do have a capital gain event or things like selling a property. You can use that to get that tax bill right down and drive some more savings.
So what action should people be taking right now in terms of their tax?
Well, I think understanding your deductions so you know what you can claim and what you can't. Second part of that is that you've got to keep good records so that you can back up your claims and also to make it easier for you at tax time. And then look at the tax saving strategies or the levers that you can use to actually get ahead. You mentioned super contributions is one of those. Also things around your investing, your investment structuring, making sure that you're on the front foot with your tax planning around that. And importantly, that you're doing it before the financial year is finished, because a lot of people start thinking about this stuff in July, trying to get a bigger tax refund, but by then it can be too late to do anything that makes a really meaningful difference. So July is a great time to tax plan, but that's for the tax year that we're currently in, the tax year ahead, and then tighten everything up around March, April before the end of the financial year so that you can put some moves in place to actually make a difference to your tax.
Ben Nash, always full of great advice. Thanks, mate. Good to see you.
No worries.
Let's talk super, because what you do with it today can make a serious difference to how you live later on. Here's a myth I want to knock on the head. I'm too young to worry about retirement. Let me tell you, not true. According to research from Brighter Super, Aussies who start early are almost twice as likely to feel comfortable in retirement. Yet right now, only 38% of people say they feel financially prepared. Start planning before age 40 and your chances of a comfortable retirement lift strongly. Leave it until after 60 and those odds fall. But wherever you're at, taking action today can still make a real difference. Here are some simple steps to get you started. Check your super balance and how it's invested. And if you've got more than one account, consider bringing them together to avoid paying unnecessary fees. Make small extra contributions when you can. It can really add up. Work out what a comfortable retirement looks like using your super funds calculator. And build your plan. Tap into support from your super fund and consider financial advice to help keep you on track. When it comes to planning for a brighter retirement, starting earlier really does make a difference. Still to come, learnings from a long-time investor. What are your personal financial goals and how hard are you making your money really work? Look, I love talking to people who've been through that journey and learning from them. Today, I sit down with Raf. Raf, good to see you. Tell me about yourself.
I live in Sydney. It's my home city, and I've always been interested in money and investments, even from a young age. I just saw my father work hard, but not work smart. And I thought to myself, well, instead of having one asset, why not have multiple income streams? That attitude towards investing has always been front of mind for me.
Right. A lot of people have a fear of money. They're afraid of it. How did you break down the fear? Because a lot of people think it's complicated and when in fact it's sort of common sense, isn't it?
It's second nature for me. Money has always been the thing that could help you buy property, go on holidays, buy your next vehicle, buy a bike for your children. You don't grow that, who's going to look after you in retirement? So start young. I've got the attitude not to make money quickly. Take a long-term approach.
What's the biggest mistake you've made or the biggest lesson you've learned?
It takes a while to save a deposit for a home in Sydney. And you've got to be really smart about it and go without for maybe a short time. Once you acquire a certain deposit to acquire an asset, it's a good feeling. So for me, it's I guess it goes back to me being patient and contributing to either an investment goal or a deposit. Sometimes I wish it could be quicker, but I know if it's quicker, then it's probably not going to be as successful as I would in undertaking my research.
So, do you think your goals will change, your financial goals into the future? Do you notice them changing?
Yeah, I think they do change. I'm in a position now where income generation is key for me. So hence the property in my super fund or my Term Plus investment, which gives me that cash flow that I need to fund my other investments or my lifestyle.
So what attracted you to Term Plus?
I think it was the comfort and quality of when I investigated with my investment process, how everything was looking good. So there was no major issues with compliance or with ASIC. They were offering a good rate compared to the Reserve Bank rate. I started small and I increased it. And I've even put in some of my superannuation money into Term Plus. I think for me, it's been a great investment. It's given me great cash flow. For other people, I think it may be part of their bigger diversified portfolio.
So if I gave you $2,000 now, what would you do with it?
It goes into Term Plus straight away.
Is that right? Yeah.
It would, because I'm in a position now where I own my asset, there's no mortgage, I don't have any debts. This will increase my cash flow. Fantastic. And I can buy the expensive mineral water, not the cheap one.
All right, Raph, your shout.
Pleasure.
Good to see you.
Pleasure. Good. Thanks, David.
Coming up, the pet insurance myth catching Aussies off guard. Now to a common belief for many Aussie pet owners. Pet insurance is not worth it because most pets never get seriously sick. The truth is, emergencies can strike at any time. And if you're not covered, vet bills can be crippling.
Pet insurance is a funny one. You never know if you're going to need it.
According to Compare the Market, the average Aussie has forked out more than $1,400 on their biggest emergency vet bill. One person even reported spending $30,000 on a sick pet. Yet less than 10% of dogs in Australia are insured.
So he rushed to the vet and we discovered that he had eaten that lady product.
Property expert Andrew Winter's family pooch, Louis, swallowed a tampon. Without cover, his out-of-pocket expenses would have been in the thousands.
Pet insurance is just about giving you peace of mind.
Policies typically cover 70 to 90% of eligible vet bills, and pricing can fluctuate based on risk. Your pet's breed, age and history also impacts the rate.
The main things to look for in pet insurance products is what it is covering you for and what your financial obligation is.
If you do choose cover, there are ways to spend less. Insure early, ideally in your pet's first year. That's when most problems arise. Look for features like routine care. Shop around online, policy prices can vary greatly. And read the fine print. Pets with pre-existing conditions won't be covered by a new policy.
It might actually be cheaper than you think.
Think about the worst-case scenario. No pet owner should ever have to choose between paying a vet bill and saving their pet's life.
Hi, I'm Grady Wolf from Bell Financial Group, and here's our stock of the week. Goodman Group is a global property company focused on warehouses and data centres, the infrastructure supporting online shopping and the internet. The company owns and manages properties across Australia, Asia, Europe and the US, with more than $87 billion in assets. Goodman has benefited from the growth in e-commerce and artificial intelligence, which is driving strong demand for data centres. Right now, the group has more than $14 billion of developments underway, with about 70% linked to data centres alone. Another advantage is Goodman's access to power and its global property footprint, both essential for operating data centres and helping it stand out from competitors. While the market had hoped for stronger recent earnings and the share price pulling back, we still see this stock as a smart long-term opportunity. With exposure to AI, cloud computing and online retail, Goodman Group remains well placed for growth into the future.
Well, that's it for today. I hope you've enjoyed our first episode in this season of Your Money and Your Life. For the very latest money and investment news on tap, go to ymyl.com.au, and while you're there, subscribe to my free newsletter, which gets sent to your inbox every Friday. Thanks for joining us. Next week on Your Money and Your Life, couple goals, what it takes to have a harmonious financial life. Is cheaper E10 unleaded petrol bad for your car? The secret weapon to getting your super on track for retirement. Plus, in Kochie's budget challenge, Dill Hunter extraordinaire Brandon gets a surprise.